The third panel discussion is about to begin, which is going to be a power-packed session. The topic for the third session is Digital Public Infrastructure, Leveraging Fintechs and DPIs to Redefine Banking. It is my privilege to invite on stage the panel of speakers for this session. Shri Rajiv Ahuja, Executive Director, RBL Bank. Shri Nitesh Ranjan, Executive Director, Union Bank of India. Shri Suvendu Pati, Chief General Manager, Reserve Bank of India. Shri Ashok Chandra, Executive Director, Canara Bank. Ms. Shalini Warrior, Executive Director, Federal Bank. And our moderator for this session, Shri Anurag Chadda, partner, McKinsey & Company. Welcome.
Hi.
Over to you, Anurag.
A very good afternoon. I think we have the most difficult task at hand. I think the post-lunch sessions usually are the most difficult ones. I think not only do we, have to keep ourselves awake, I think we have the duty to keep everyone awake. And as I think somebody said, I think that's why the panel is just post-lunch. So I'll try to make it very interesting and engaging for I think the audiences as well. But at the outset, I think we all, are living in the eras of Fintechs and DPIs. I think Indian banking industry, as we all know, has been going tremendously thanks to the macro trends in terms of the economy, but also a lot of the digital revolution which has actually happened in India. And I think the government has actually set all the railroads right, specifically with respect to digital public infrastructure. I think the key questions, as the panel and the theme of today's event is how do you really redefine banking in the era of technology and AI? But more specifically, I think with respect to the digital public infrastructure and the fintechs, I think the role that they play in redefining banking here. With that at the outset, I welcome the esteemed panel members for this very interesting conversation, as I may call it. Maybe I'll just start with a very top-down message, I think, in terms of the biggest trends and disruptions which are driven by either the fintechs or the DPIs, and how has that actually impacted the banking system in particular. And maybe I think, Mr. Ahuja, if I may ask you to kind of maybe open the panel in terms of what are the biggest disruptions that really you are seeing and the trends that you are seeing.
Thanks, Anurag. Thanks for having us here. And several of us were here a year ago discussing something, and I think it's quite heartening to see that progress which the industry and the country has made in making financial services very inclusive. And I'll just take the last word. You see, ever since the whole DPIs and the various India Stack components have been made, I think we've seen an explosion in the ability for many providers to come together and provide financial services at lower and lower costs of intermediation. The biggest problem in banking and broadly financial services is the cost of intermediation, cost of discovery, cost of getting data, cost of monitoring, etc. So DPIs actually address that squarely, and also because DPIs are done at a protocol level for the entire industry, so you're setting standards very early. So the cost of innovation comes down, which is where it helps not just banks but fintechs. Imagine if fintechs did not have this, or even the telcos did not have KYC, it would become very expensive. So what it's done is brought financial services to many people, which hitherto would not have been possible. And our role as a bank is not just to adopt these, but also find out partners with whom we can address different pain points, different client segments at economics which serves those clients better and better. And at scale, everybody can create value.
Interesting. I think you use the word inclusivity, and that brings me to maybe Mr. Ranjan, you, because I think from a public sector point of view on the same question, in terms of what are the innovations, and public sector is actually known for driving financial inclusion. Are you seeing things which are very similar to what I think Rajiv was just mentioning, or I think what are you seeing in terms of the biggest trends and disruptions?
So I think definitely the financial inclusion perhaps would have been the first and foremost objective when the creation of the entire India stack would have come. And definitely, if we look at the last 10 years, the way the country has reached out and opened the accounts of millions of individuals, and today we are in a country where from the global standards, there is the largest deepening of bank accounts, right? So that would not have been possible without this. But I think along with the financial inclusion in terms of individual having a savings account, what the DPI and the Fintechs has also transformed over the last many years is about the deepening of the finance. So financial deepening itself, you look at, and India has been, if you look at the penetration of credit, the consumer credit and everything as a percentage to GDP, it has been quite low. So perhaps this DPI and Fintech has made financial deepening by making credit available and also at the affordable cost, as Mr. Ahuja said, because it has perhaps reduced the cost of acquiring a customer very, very significantly. So, in order to understand actually how the DPI and Fintechs have shaped, if you go back 10 years in our memory line and try to understand what was the process for acquiring a customer, what are the process for doing the KYC for a customer, what are the process for accessing the documents of the customer, which is not only the document and data, but also a reliable document. So in terms of that, DPI has really made a lot of change. And my sense is that first stage we have achieved the financial inclusion, but the next stage of it is going to be the financial deepening, both in terms of the mortgages and other financial products, maybe the insurance or the mutual fund products, we'll see more and more of it. And also that perhaps this ecosystem has enabled partners to come together and innovate and co-create, which was not possible in the absence of DPI and trustworthy ecosystem of data. And now simultaneously, and I think Mr. Pati will also talk about the kind of other platforms that RBI is leading in terms of the IPPTF. I think several more will come, and that is only going to solve the problem of data at a low cost and reliable data.
Yeah, no, so interesting. So you're saying from financial inclusion to financial deepening, from not just competition, but also collaborating with different partners. I think that brings me to the second question. I think, while we talk about the macro trends, and I think that's very clear, the customer onboarding process, KYC, a lot of that has actually changed. But what are the specific use cases that we are seeing this collaboration happen very well? I think we'd love to hear some specific impact stories, and maybe, I think, Shalini, if I can bring you in, I think you've been at the forefront of some of this innovation in federal, but love to hear that impact stories from you.
Sure. Thanks, Anurag. Good afternoon, everybody. I don't think any of us can imagine a life without digital public infrastructure any longer. We'll have to rewind our memories back to a time when we didn't have it. Clearly, the platform that has been provided by DPI has been hugely beneficial, as Nitesh and Rajiv have already alluded to. I'll just talk about two examples that can kind of hopefully bring this to life. And this is where DPI, Fintechs, and all of us come together. RBI, Innovation Hub, all of us come together. The first is an example of what we've been doing with dairy farmers in Gujarat. This is a classic example of financial inclusion, financial deepening. The entire process is such that working with a fintech partner, we've gone down to the level of the dairy farmers. 65 or 70% of them are women dairy farmers. So the account opening is done using DPI because it's a tab-based account opening process where Aadhaar authentication happens. Once the account is opened, when the customer, the dairy farmer, wants access to funds in some form and fashion, because let's be fair, some amount of cash is still prevalent, the whole process is through AEPS. When they want to pay a utility bill, it's through BBPS, which is the utility that is available. But having done that much, we've now taken it to the next level, which says that how do we kind of increase their wealth? And that's where Nitesh speaks about financial deepening. The concept of digital bovine loans, digital cattle loans. And there what we've done is working with a fintech partner and with RBIH, including the platform that I'm sure Mr. Pati will refer to. We've incorporated it in such a way that you get the entire history of milk pouring. So you know how much of milk production has happened through that dairy farmer in the last 1 year, on the basis of which you can literally do a pre-approved loan for the next kind of cow that the farmer wants to buy. So we've now expanded it to start looking at digital bovine loans, and we've started disbursing those loans, which helps to increase the wealth. So that's one kind of example of where virtually all parts of the infrastructure have come together. The other, which is again, Nitesh will know very clearly, working with RBIH, what we've done with agricultural loans in Tamil Nadu and Union Bank has done in Madhya Pradesh. Again, getting an agricultural loan for a farmer was a Herculean task. On an average, it would take 3 weeks at the very least to get it. Using the infrastructure, working with a fintech partner and with RBIH, we've brought that down to literally 5 minutes. I know in the first couple of rounds it was higher. It was at about 20 minutes. And Rajesh Bansal of RBIH gave us a task to say, please bring it down even further. And we've incorporated virtually everything, including obviously Aadhaar authentication, e-sign, you name it, all of them have gone into the process. And that's kind of turned the life around for these farmers to say that, you can actually get a loan in as low as 5 minutes, So I think these are kind of practical examples of where banks, and not just federal, all the banks on the panel will have examples where we've taken the infra that has been provided by the government to make it more practical for our customers. So these are some examples of that, and there are many, many more, I'm sure.
Oh, interesting. So from 3 weeks to less than 5 minutes, I think that's quite a big change. But any examples, I think, from Canada, Ashok? I know you have also been kind of doing a lot of these innovations as well, maybe financial inclusion or financial deepening?
Yeah, good afternoon. First of all, thank you to the entire IBA team and the McKinsey team for giving me the opportunity to this very, very interesting session. I think we are all talking about the DPI. I think today's environment, if any financial institution which is not there in the digital platform, I think very fast they will be losing the market share. Without their understanding what is happening, I think the things will be happening in the system now. So Madam mentioned and Mr. Nitesh also mentioned about the financial inclusion, how the DPI has helped. And we need to go to the different and the graduate to the different level now. So I think how we can penetrate further through this DPI tool. I will just share two very, very live example. One is that which Canara Bank in association with RBI Innovation Hub, which we have done is that SHGPs, self-help group. I think this is one community which the government of India has also declared that we need to have the 3 crore Lakpati women in a span of another 5 years' time. So we picked that piece and we worked with RBI Innovation Hub. And we studied what is the pain point for the SHG members. If you see the data point, we have 15 million SHG groups in the country. So it is almost 1.5 crore. And average, if you take 12 to 15 members in every group, it constitutes around 15 to 16 crore women members in the country. So that is the magnitude which is there in the country today. Today's environment, if you see in the entire banking system, how these entire things operate. See, we are opening the SHG account. We don't have their digital mapping of the members. It is all, they provide the list of their members and it is kept in the file in the branch book. So what we did now, and it takes around 3 to 4 weeks for creating the self-help group and then opening the SHG account in the bank. So what we did now, we have through the tab-based system and through the Indian Stag, we are opening the account of the SHG members in a span of 2 to 3 hours. And that too, not only the SHG group, if there are 13 to 14 members are there, all the members group customer ID also gets created in the entire system. So what the purpose is that how we can bring the entire, the members of that self-help community in the digital framework so that we can map the transaction which is happening in that particular account. And these ladies who are operating the transactions in the system, I think that also should be tracked. So we have started opening that account. That was the first thing which we did through the system. And then the intra-lending which the SHG members do that also it was happening through the manual. Some SHG members, they were keeping the money in their house and they were distributing among themselves. So that also we have brought it in the system. Now the entire intra-lending also happens through the system itself. And there we have involved the BCs model now. So the BCs, through their hand-picked models, they go to the SHG members' place and they do that and they facilitate the transactions. Now the next stage was once 6 months or 7 months are over, they are eligible for the financial inclusion and they are eligible for the credit linkage now. So what we have done now, the system itself monitor the transactions which is happening in that particular SHG group. And based on the transaction which is happening, that 6 times or 7 times of that eligibility, or 1.5 lakh, which is the initial credit linkage amount that is to be given, the system itself tracks. And once the 6 months is over, the system gives the message to all the SHG members that you are eligible for this much loan. And if they give the accent, then immediately this entire amount gets distributed and gets credited to the SHG account. So now it brings a transparency also. Now it is not that president or secretary in the SHG, they are part of this, this disbursement. All SHG members, they are knowing that this much amount has been disbursed and it is credited to the saving SHG account now. Now, after that, further whatever the repayments is coming, that also we have brought it through the system itself. So what I mean to say that from the account opening, intra-lending, tracking the transaction in the account, and the repayment of the loan, entire piece we have brought it in the system now. And that we have done it through the RBI Innovation Hub. It is already, we have started Pan-India opening that account. What I feel, if we are able to bring this entire 15 crore community in the digital platform, I think we can empower the women community. Second important thing, today, we don't have the CIBIL score of all these members. Now, once you have the transactions and they have opened account, and we are not asking them to open account with Canara Bank. Even if they have account with any other bank, the system is transferring that fund through the NEFT and RTGS to that respective bank. So we are not forcing that members to open account with Canara Bank. But we are able to track the transactions, and we have integrated through the API with the CIBIL, so that these people will have that scoring matrix also going forward. Because what we have seen, that during this SHG journey, there are so many ladies who have developed themselves as a separate entrepreneur. So can we do the funding? But we don't have any matrix to decide. Because bank funding, again, will go by the CIBIL score and all. So we are bringing those pieces in that system. And then we have integrated with the Uddami portal also. Now suppose they have graduated and then the Mudra loan can be given to these people. Then can we give it to them based on the Mudra certification, Uddami portal MSME certification? So we have integrated the transaction on the CIBIL portal. We have integrated them with the Uddami portal so that this entire journey can be tracked through the system. Entire their digital footprint is in the system. And going forward, I think any financial institution would love to deal with those people now.
Yeah, no, I think interesting examples of, I think, how the journey between financial inclusion to now you're talking about financial deepening. But I think I also caught hold of mention of RBIH and the role that I think it is kind of playing. It brings me to the question, it seems like too good to be true, but I think Mr. Pati, maybe if I can kind of bring you in, you have seen this over a period of years. How has this partnership between the banks, the fintechs and DPIs evolved over the last few years? And what's the operating model that is really working? But also, what are the challenges? Because I think from the regulator standpoint, you're actually seeing both ends of the table, right? And the story seems too good to be true, but would love to hear, I think, the evolution of the partnership, what is working well, and what are the challenges as well?
Yeah, thank you, Anurag, and thanks, IBA, for having me here. Speaking last in the panel has its own advantage. The hall is full now. And very pleased that all my co-panelists, except probably Mr. Ahuja, all talked about Reserve Bank Innovation Hub. And that has made my life easier because all three shining examples how innovation can happen and data can be unlocked for extending financial services and making life easier for everyone. So that's the power of data, digitization, technology, which is really playing out. And possibly, a regulator which is traditionally seen as a very stiff-nosed and Reserve Bank of India, nobody would imagine that we are agile and we were to do these things. Just to set things perspective before I go on to your real question, is that we have set up a fintech department within Reserve Bank of India to give dedicated focus to this sector. And one of the prime drivers is to foster innovation. And with that objective, the Reserve Bank Innovation Hub was created as a fully owned subsidiary of Reserve Bank of India. And all these, three examples, be it the, Kettle digital KCC loan, the public tech platform for the frictionless credit, which was announced as part of the monetary policy in August 2023, and now it is running successfully, or the SHG, digitization of the SHG journey. These are all three examples which the Innovation Hub has taken, and some degree of ideation and the support behind this was lent from the Reserve Bank's FinTech department. So our objective is very clear, as we say that we want to foster innovation. And this is the time, like I would also take a little moment to share two or three things, is that everybody has heard about Aadhaar, the power of Aadhaar or the digital identity. You have also heard about the UPI. But what are the next three things or 2-3 things which we are likely to see and which can be transformational? So I would first talk about the public tech platform on frictionless credit, which has already, the pilot is operational. It's already run for around 6 months. And we have disbursed around 3,600 crores of loans using this platform. And our very own first starting partners, sitting on my right, Mr. Union Bank of India, and Mr. Nitesh Ranjan was the person who was behind this, start, and Madam Shalini representing Federal Bank, one public sector, one private sector, starting in this journey with the digital KCC. They started in Tamil Nadu, they started in Madhya Pradesh, and both are running successfully. And now it has reached us to a scale where 5 types of loan journeys and around 10 banks which are already a part of this process. So this is again something we have seen a lot of innovation on the payment space. But this is something we believe can be really transformational in the, and the power is there to unlock data, do the integrations in a seamless manner which would be more efficient to the lending ecosystem. So this is going to be what we believe as a next DPI for the lending ecosystem. Second thing, that one innovation which we have, you would have heard about in yesterday's monetary policy announcement, is also on the central bank digital currency. And I'm glad to again report all 3 banks, Union Bank, Canara Bank, and Federal Bank, there are partner pilot banks in this journey. So going forward, there would be definitely a use case and potential. We have yesterday announced about the programmability and the offline functionality. So again, here would be another case where technology plays a role to breach the financial inclusion, to have services provided in the areas which do not have connectivity and all that. Similarly, the account aggregator framework. It might not be a DPI in itself, but it's a building block to the DPI. So it also unlocks a lot of potential, data service provider brings together to the connections. And how do we, now let me turn to the question per se with regard to how do we see this. Let's understand what are the strengths of a bank and what are the strengths of a fintech. So the banks typically, they are the balance sheet risk takers. They have the funds. They have the trust of the people, huge data and customers already. Fintechs are agile, they can innovative. They can bring those transformations, and it is this kind of collaboration which is the best way one can, once each other's strengths can be leveraged or married. And like to give a cricket analogy, if you have the solidity of Rahul Dravid, you also get a Rinku Singh who can do a quick hit quick sixes and get things done. So the agility, the innovativeness, these two can get married, you have a beautiful combination. But there are challenges as well. There would be challenges in terms of onboarding, the time taken by the banks to, onboard, the cyber security, data privacy issues, the sustainability of the fintechs themselves, and so on and so forth. So these are the future things where the banks need to be a little careful. And on the fintechs, while they are very good in terms of their products and technology, they need to probably spend a little more attention towards the governance piece and put things house in order, little bit pay attention to the assurance function and develop those models in partnership with the, and make it a journey which is really collaborative and benefiting each other. So that's the way we would like to see. And what from our journey with having regulatory sandboxes, what we have experienced is that sometimes we get to hear from all those fintech partners who want to experiment. Banks, typically mostly the large banks, they take a little longer time in getting engaged with the fintechs. So my suggestion to the entire banking fraternity who are here is to possibly have a dedicated fintech engagement cell or a unit so that they can drive things and be the single point of contact with the fintechs for onboarding and help them, and don't set such standards that the fintech small entities, new entities, they find it difficult to connect. Sometimes that agility or the focus needs to be there, where the technology platforms need to be built and developed so that they can come and test through the sandbox. These are some of my initial thoughts.
So, but essentially you're saying the collaboration should and will increase. But I think from a banking standpoint, I think Mr. Ranjan, I think what is your point of view? You have also shaped some of this collaboration in the last few years, but what are the specific challenges? And I think to Mr. Pati's suggestion, that like a fintech desk or the kind of rules that we have to evaluate, I think what would be your suggestions to make, I think what are the challenges and how do you kind of go forward from there?
Yeah, so first of all, I'll say that whatever evolution of the DPI and the fintech industry today we are talking about, and DPI is only present in few countries actually. But how India differentiates is the way the government and the regulator, and when I talk about the regulator, it's not only with the Reserve Bank of India, but if you look at IRDA or the SEBI, the way they have led it from the front, right from creating a fintech department, subsidiary for looking at it, the sandbox approach, I think that has been a great facilitator and a factor of trust between the banks and the fintechs to take this forward. When we look at the journey that we have experienced, so maybe 4 years ago we started this partnership journey with the fintechs, and if I look back, I'll feel foolish also because at that point of time I remember in our management discussion we'll talk more about the fear of partnering with the fintechs, and that will come from fear of losing customer to fintech, fear of data loss to the fintechs. All those things were there. But I think we have made a very, very significant progress from that point of time in really been able to understand what is the right relationship with the fintechs and what for we should build. I think 2-3 principles I would say that we have in mind, and I think that is generally applicable. And also I think fintechs in the room and those who are watching this, is that the relationship between banks and fintechs really depends on the fintech's maturity level. And when I talk about that maturity level, it's about whether they really have the right technology, whether there is something newness in their technology or something that they can co-create with the bank, and whether they have really tested any product, what is the traction level that they have achieved, or they are just trying to do business or do business with the bank. These are two different parts of it. Secondly, the overall technology vision of that fintech, that's very, very important because I see many of the players, we have 100,000 startups and fintechs, many of the players, they do not have very robust solution, but they just want to bring something and perhaps there is a value creation in mind. So that will also not help. So the technology maturity, technology vision is very, very important on both the sides for a fruitful collaboration. And the other side is both for the banks and the fintechs, what for we are collaborating, that should be very, very clear. I think if we are collaborating for the objective of cost reduction, I don't think that is going to happen. Because if you look at globally, the banks and fintechs, financial services industry and the fintechs, they have collaborated. The cost reduction, that's not the prime objective. I think prime objective at the end of the day with all this digital infra is creating a very, very unforgettable moments of experience for our customer. I think both fintechs and financial services players should look at the customer experience as the prime driver of the relationship, followed by maybe the process efficiency, the ability to find newer markets, ability to find newer customer sets, and then perhaps the cost and everything will come with the scaling up. So I think these are the few principles that one should follow. There are obviously challenges of the trust, of other things, but we should be able to bridge that over a period of time. And therefore, I believe that this fintech, DPI, and the financial services players, I think several kinds of models will actually emerge, and all kinds of models will have their relevance. First, obviously, is the platform-centric aggregator-led model, which we are seeing today maybe for the AA or the OCAN or ONDC kind of thing, where someone is setting the rules actually and orchestrating the technology, and all others, and they are bringing the players to play in that market. So that is one kind, and that is perhaps going to be the most profitable for the banking industry because of the sheer scale which can bring the cost. Second could be the community-led partnership in the ecosystem, and I think IBA's initiative of the PSB Alliance is one such thing, where for a particular community you are bringing the financial services players like PSU banks and the fintechs together to create niche solutions, and I think some of those things are already happening. And the third part is also the enterprise-centric, bank-centric ecosystem, where you work with the fintechs and the other tech partners to create more enablers for your, your customers, maybe the commercial customers or the corporate customers, maybe for their supply chain or the vendor management. All these possibilities, all these three channels, I believe, ecosystems will emerge gradually. And thankfully, I think we have the support of the regulator and the government in this. And therefore, I am very, very positive that this ecosystem is going to drive a good collaboration, going to drive the revenue generation for all kinds of players, and eventually will lead to the cost optimization also.
So I think.
Sorry, Anurag, can I just come in on a minute on that one? Just to, take off from what Nitesh has said, and Mr. Pati also referred to it. Collaboration between fintechs and banks can only happen, in my view, if specializations are developed within the bank on how you work with fintechs. Yeah. So, from the evaluation of the partnership to all the risks that are involved in it, the compliance requirements. So what we've done in Federal is we've actually created a separate business division for fintech partnerships. While they run with business metrics, whether it's personal loans, credit cards, whatever the product is, they also have co-opted with them specialists in compliance, specialists in operational risk, specialists in cybersecurity, specialists in technologies. These are people who kind of co-create along with the fintech to make sure that the solution that is delivered ultimately is a solution that is compliant in all respects. And these are specializations that has been created. So that's how we've kind of evolved to the stage where today we can talk confidently with fintechs to say, these are the contours under which we will work with you.
Yeah. No, maybe I'll also bring in Rajiv. I think you have seen this journey, but what are the, from a private sector standpoint, I mean, how is that collaboration really going? And I think there's great examples of a special desk and ops risk guy. So how do you deal with it?
So Anurag, we've been at it for 10 years now. I mean, I think somewhere around 2014, we picked up just as a idea which
hobby
came
on the side, I think.
Yeah, well, for us, it's more than a hobby because as a almost like a new bank being born from its history, we could not repeat the business dimensions of what some of the larger banks have successfully done. So we had to look outside, and something leads to the other. So I would say over the last 10 years, we've matured as an organization how we deal with partners. We've also learned from them as where agility can play a role, and hopefully we've been able to impart to them the value and the necessity of maintaining strong governance practices and data practices. And I think about 5-6 years ago, we sensed that this would become a major issue. So we started telling our partners to bulk up on this area, and actually basically had some tough conversations, if this were not the case, because ultimately you're using regulatory engines, which are being exposed.
Regulatory business,
Yeah, so I think people have evolved. So I see three, now this is a summary of these last 3 ways which we have worked with us. One is purely as a user of their technology, and I can see some of the logos there of younger companies, and we've been with them from the initial starting days. So, and they're now, nice to see they're so large that they're partners here with IBA. Second is where we are the infrastructure provider to them at the back end. So they're doing the business. We basically are providing them our financial services capacity, capability, and letting them run at scale. So there, the issues of resilience, what's your TPS, what's the recon you can come, and how much can you automate your manual systems to work at the scale and speed. And that's been an amazing journey, and I think something which has helped us build our non-fintech business also dramatically. The third area, which is actually what even Nitesh alluded to, that, can we partner and co-create some businesses for your customers? So one of the most attractive things for RBL is that we're not going to recreate customers, afresh. There are customers out there who are perhaps underserved, perhaps not adequately represented in a bank or an NBFC. And some fintech has a very special understanding. And several examples, MSME, supply chain, these are very, very large areas, very fragmented. So the larger MSMEs are well addressed. What about the smaller ones? So we've picked up some partners where we know with their help, we can create other products and services for their customers. And that co-creation should leave more value to be shared. Obviously, the customer sees value because many of them don't have the time to go to 3 different institutions, and therefore they save time, but it also creates value for the partner, and then for us it creates customers. So these 3 things are there, and how we've organized ourselves, I think early days, it was pretty much centralized in me, let's say. But then now pretty much all our various business divisions have got the religion. I mean, this has taken us time, but so pretty much every every business group has its some common script of what not to do, what to do. It obviously centralizes in some place. So we are endeavoring that in every business, we should figure out these 3 patterns. Use of technology, infrastructure services, as well as co-creation or creation of new customer base. So I think we are finding that the scale and the opportunity is becoming meaningful for our partners and therefore meaningful for us.
No, great. I think, and that is a great framework to really evaluate what kind of a partnership you want to do. But you also alluded to specific guardrails, and that brings me to the next question. I think while all the partnership is great, I think clearly it's a regulated business. Many of you kind of alluded to it as well. What are the specific risks and guardrails that you see? And how are you kind of coping up with this? I think you alluded to some of this, saying, I think the data protection as well as technology challenges that are there. But maybe, Shalini, if I can ask you, I think at scale, right, you're exposing your APIs to a lot of the partners, the customer data is going in. But what are the specific risks and guardrails that you see building as well?
Clearly, yes, we are in the business of trust. And as bankers, we have to retain that trust. So clearly, compliance is a thing. As I say very often, regulatory non-compliance is non-negotiable. Better said than not said, but keep repeating it to ourselves also very often. So I think from a risk standpoint, the first point, Anurag, is, there's got to be a meeting of minds on the risk between the founders and when we deal with fintechs. And that comes to light when you have a couple of conversations, which in Federal I lead more often than not, to have those conversations to see what is the partner thinking about, what are they kind of working on from a risk standpoint. Having said that, the other kind of then downstream implications of it are around the main risks that we see are around, things like KYC, AML obviously is a critical risk element, and therefore the controls that we put around that, the ownership of that rests completely with the bank, and that's non-negotiable. The whole data security, data privacy, data access, when the Data Protection Act comes in, whatever changes are there. But even without that, all of us know what the boundaries on that are and how we kind of control those risks. And those are controlled very heavily through the infrastructure in the form of APIs. And these APIs are well controlled by the bank. The third element of it is transparency from a customer standpoint. And there I think the regulators have done a brilliant job of laying down some of the boundaries of this, whether it's the digital lending guidelines or the master direction on credit cards, debit cards, etc. The customer transparency, even in the recent monetary policy, there have been some change. So the whole transparency, and are you open to what you're telling the customer, whether it's down to APR, to KFS, to all of those. So I think customer confidentiality and awareness is the other thing, which again, the bank subjects the partner to a lot of reviews on. And then, the overall kind of rails, the overall controls are in the form of fairly intense audits that are done, by our partners, by our third parties. So it's a conglomeration of various things, no single silver bullet on this. Every element of it has to be reviewed in detail. And, the control lies with the bank. I mean, that has to be made extremely clear in the partnership and in every aspect of the partnership.
It's interesting. So it's a meeting of the minds, but the control still lies with the bank in some form. But I think maybe, Ashok, helpful to just get from another public sector point of view also. How are you managing this? You're on this journey or also, I think, innovating. But what are the specific guardrails public sector banks are really putting in as well?
Before coming to the specific point, I think first and foremost important thing, especially for the public sector bank, which I am talking about, is the mindset change. That is very much required. I think we need to create a very good ecosystem in the entire environment where people in the organization, they have to believe that there is only one way, that is the digital way. That is the first thing. Now, coming to a specific to the risk perception, which we are all talking about, yes, when you are collaborating with fintech and different partners, I think there is a need to go back and see how your policies are there. Very first important thing is the data privacy and the personal information. I think that becomes very, very important. I think for that, we can have the different layers. One is whether we can go for the authentication, tokenization, or the encrypted format, whether we can share those informations. I think these are 3-4 important things for the data protection and the personal information when you are sharing about it. Second important and very important factor is the cyber security. I think we need to have a very, very strong framework in place because you are dealing with various fintechs, and you are doing it with the open network where you are providing every information through your API. So how strong your cyber security framework is there, that becomes very, very important. Your firewall and the servers and all, how it is well protected within your guidelines. Third important factor is how we are regulatory compliance. And in our organization, and I think every organization, they are having the principle that compliance first, business next. That is the principle on which we are working on that. So regulatory compliance is foremost important. And we are really very happy that in today's environment, I think RBI is giving a direction, and very, very clear roadmap is there, how we need to move ahead, how we need to integrate, how we need to collaborate with the fintechs. And last piece which I would like to share is that how our the personal information, what you are sharing it, how my customers, they are aware of about that. Madam mentioned about the transparency. See, any change when we are bringing it in our system, where my customers are aware of that, whether we are telling that these are the changes which we are bringing it in the system, I think that plays again very, very important role, because we are in the industry where customer trust is very, very important. So again, I think this plays a very, very important role. But at the end of the day, I can just quote that you have the service lane and you have the expressway. Now today's environment, even if you have to pay higher cost, I think everybody will feel to travel on the expressway. Now digital DPI is creating that environment now. You can't avoid that. You have to go on that DPI journey. Now, the important thing is that how you are safeguarding yourself, how you are safeguarding the interest of the customers, and the purpose which is there for the DPI is that how we can provide the superior customer experience, how we can provide the superior employee experience, and how we can penetrate down the line now. I think with these three objectives in place, and we have a robust risk management system under the firm regulatory and legally compliant framework, I think definitely the journey will be very, very smooth.
I think maybe just the closing comments as well. I think as a lot of you spoke about data protection and all, and Ray, I mean, laying this highway, but I think maybe as a part of the closing comments, Mr. Pati, I think how's the regulatory framework going to evolve, and how do you really see the banking in future with all of this, the trifecta of DPI, fintech, and financial services coming together?
Yeah. Basically, I would focus on the regulatory space for the banks are pretty well defined, and expectations are clearly laid out. But what we are going to see and is on the regulatory side of the fintechs. Exactly, some of you would have come across that we have put out a discussion paper and sought comments on the self-regulatory framework for the fintech ecosystem. Now, let me just amplify a couple of thoughts on that. Basically, we want the fintech ecosystem to, retain their agility, retain their innovativeness. And sometimes, if you bring in regulations very early and put in a regulation which is very tight, the innovation gets stifled. And so, therefore, the preferred approach, what we see as on date, is to have a very, very balanced and flexible approach, where self-regulation should be the primary driver for bringing some kind of a discipline or systems and processes to the fintech ecosystem. And once it is like they themselves decide on the goals, the objectives, the customer conduct rules, the governance frameworks, baseline, say, hygiene standards, so those things are self-evolving, then the implementation and buy-in also is better. We don't want to be very prescriptive, do not want to impose certain things right from the start and make them stifling. So that's the whole objective, but at the same time, whatever is the residual element of risk that may remain within the system, obviously both on an entity-based approach or an activity-based approach or an outcome-based approach, those kind of things would get dealt with as part of the regulatory regime. And of course, but our objective is to nudge the entire ecosystem to use technology for the beneficial purpose, drive innovation, make it responsible. Responsible innovation should be the buzzword. All those indicators like profits, revenue, top line, all those things will come, but the fintechs themselves should aim at building a very, very sustainable business model. And that should be the spirit, and we all can do it. In India, largely it has been a public sector driven DPI initiatives on top of which fintechs have been innovating. And there is instead of this room, there is a hall for improvement, hall for innovations to happen, and the scope is immense, and the journey has just begun.
Yeah. No, I think I take away the responsible innovation as the theme for the future of banking. But any closing thoughts, Niteshji, Rajiv, anything?
No, I mean, I think we've kind of summarized all aspects, and I do echo Mr. Pati's thing that I think there is a huge amount of scope to combine all these three in a responsible manner, because the scope of financial deepening is very, very high. And again, the economics of our business is changing very materially. And I think that's something we all need to go back and introspect, because we can't use the same combinations of factors of production as we've done in the last 20, 40 years. That will alter how the new, there's a thing, new bank of the future or something like that. But I think that's very, very important.
Yeah, I'll also echo that, with 5, 7, 10 or multi-trillion dollar economy that will be in the years and decades to come, I think there is only a huge opportunity for banks in that market. And obviously the partnership with Fintechs, leveraging the DPI is going to solve a lot of those problems. And as I said in the beginning, now the next movement is going to happen from financial inclusion through the financial deepening, leveraging DPI and the partnerships. But most important point, I think, what Mr. Pati also said is, while the overall objective of this entire partnership and the DPI and other platforms which is coming through the RBI window is to create a great experience for our customers. But like banks like us have to be mindful that whatever we are doing as a part of the partnership or the innovation or the co-creation, are we aware of the risks that we are taking? Whether the risks are within the defined risk appetite or not, whether we are ensuring that customer is safe. I think all these things are very, very important. Therefore, while at the front end of the customer, experience is the key goal, I still believe, particularly in this complex environment which is going to come because of the DPI, technology and partnership, banking has to be boring at the back end.
Yeah. No, I think I'll actually, my summary of the entire thing is, I think responsible innovation for financial deepening using the trifecta of DPI, fintech, and banks, right? And I think that's in summary, I think what I kind of took away. But I think thank you, wonderful, wonderful thoughts. I think food for thought for all of us, as well as we kind of reflect back and also plan for the journey in future. But really appreciate taking out time, and thank you. Thank you for your thoughts.
Thank you.
Thank you so much.
Thank you, esteemed panelists, for the enriching deliberations on the topic. Can we have a good photo, please?